Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing? Cody's looking for a hobby. Any ideas? Oh. Cody's looking for a hobby out there. I was trying to help him out. You know, he's one of that weird point in his life there. You got any thoughts, like, or anything?
I'm open to anything, yeah.
Okay.
Other than disc golf, yeah.
Other than disc, that's true. Other than disc golf, and he didn't seem to like hot air ballooning too much, but he's looking for a hobby, you know? We'll see what they come up with. There'll be something. People help you out there. Hey, we're financial advisors here by day. I have no hobbies myself. This is just what I do. So I'm happy to be here. I will take your questions at the end like I always do. We got a lot to talk about here today. So let's dive in. First thing I got to tell you, there may not be a closing beat tomorrow. I don't know if I'll make it back in time, but I'm going to try. But if there's not, I'm safe. Everybody's okay. It's just may not be able to make it in time. Eric will be doing the fin tips tomorrow night. I'll be here too, but Eric is going to do the fin tips, talking about nest eggs, some of the updates there, taking questions from clients if you happen to have anything. If you don't know, we include financial planning in our service, but it's an ongoing financial planning as life changes. And we actually just give you the software as if you're an advisor. So you see every last bell and whistle that we do. And so sometimes we have to do classes to kind of talk about some of the different areas and stuff. And there's always updates. So we'll be covering those updates tomorrow with Eric. And I'll be hanging out in the background, sipping on my wine, just seeing how he's doing. You know, maybe a takeover if it doesn't go too well. He'll be just fine. Also, he had a video come out today, fin tips he did today. His take on building wealth in your 40s. It's kind of a weird time in your life where, you know, you're through the, your 20s, you spent money on stupid stuff, you got a family now, you're trying to think through that stuff. How do you get past that hurdle and build a little bit of wealth for yourself? So hopefully you'll check that out. It's free. It's on our YouTube channel. You can do that there. As far as econ numbers here today, mortgage applications fall another 5.4% week over week. So that's not like, oh, compared to this time last year, we're down 5. No, that was last week. So 5.4%. The good news is I think you'll see that start to tick up a little bit because, as I've shared here with you before, you had a massive rally in bonds, which means take the inverse of this for interest rates. Interest rates do the exact opposite of bonds. The rates are opposite. And so recently here, you've likely seen rates tick lower. That's good for mortgages. But today, the Fed minutes put a fork in that bond rally pretty quickly. So that's what it is. The Fed minutes did come out today and showed that they're going to do a 0.5% or 0.75% at the next meeting there. They're going to get the inflation numbers ahead of time. They'll likely use that as a headline to decide whether it's going to be one or the other there. And they also basically said, we're okay with a small recession if it means we have to combat inflation. So you notice how they're changing the language here? Where is that? I saved it. They have changed this phrasing so many times here to just kind of slowly bring it into like, hey, it might be a soft pullback. It's going to be soft-ish. It's going to be bumpy. Now we're going to feel some pain. Now we may be in a small recession there. It's just like, they see it. You see it too. Dummy. We're out here every day watching this. So that's okay. We've seen the market pull back. A lot of you are taking advantage of that in your various ways. I like the looks of that. Let's go over here. The S&P down this morning again. And then the Fed minutes came out 2 p.m. here today. We saw that rally. It wasn't just a jump start out of nowhere kind of rally. There was about 15 minutes of back and forth before the markets finally settled in. Ultimately, we pulled back a little bit before the end of the day, and that's okay, right? We're working on trying to solidify if this is going to be a higher low, and maybe we can make some progress here, or if we're going to chop around down here at these lows until inflation numbers come out and we have a clearer picture on what the Fed may do there. We're still down 19% year to date. Every sector actually helped the markets give its lift there at 2 p.m. here today. For the year, the sectors with the largest valued stocks, the most valued companies out there, the biggest companies, are doing the worst. And so that would be like your consumer discretionary, XLY is the ETF that we use for that, down 29% year to date. Communication services, which is somewhat new, that one's the second worst, down 27%. And tech, you probably could have guessed that one there, down 24% year to date. The best is still energy, even despite giving up half of its year to date gains. This is the beginning of the year right here, right? You got a 65% rally. Now we're only up about 30% there. So it was up 65% on my birthday. The energy sector anyways was up 65% on my birthday, and now it's giving back more than half of it. On the other side there, There you go. You got utilities hovering right around the flat line year to date. That's not too hard to see. If you go over here and just kind of put your cursor right about the beginning of the year, all right, we're basically flat there for the utilities. Consumer staples, obviously, it hasn't done amazing, but it's not done as bad. It's in second place year to date, and healthcare would be in third place. All three of those have had the best rally right here over the last 3 weeks. Right? So the strongest sectors over the last 3 weeks, for whatever reason, just to catch your eye, would be utilities, consumer staples, and healthcare there. And if we look at the NASDAQ here today, also, it's the same thing, same picture. The large cap stocks are trying to do their thing there. If we can find out that inflation has peaked a little bit, what's going to happen? So this takes you 2-3 weeks down the road. If inflation has peaked, people would be more excited to go buy the large cap tech stocks. What moves the market higher and accounts for almost 30% of the entire stock market moving? It's those large cap tech stocks. So when you look at the NASDAQ, if you want that to go up, you're cheering for a peak or some kind of pullback in inflation that we'll find out in a couple weeks, and that would likely help you get that rally going there. That's probably what everybody's waiting for. Bitcoin's still floating around the 20,000 area there. We'll look at oil. Where'd it go? Yeah, another little pullback in oil. Citigroup says that oil is going to go back to $65 and then $45 by the end of 2023 if OPEC doesn't intervene. Remember, it's like the S&P here. The oil market is not a free market. Agree or disagree, it's not a free market. It's controlled by OPEC there and what they do as well as what they say. Just like the Fed obviously controls decisions that we make here in the stock market. It's not maybe not right, but that's what's going on. Bonds, actually, I told you already, the Fed minutes kind of stopped that recent rally. We also hit prior highs. So from a technical perspective, if you like that sort of thing, that's what people are looking at there. I want to point out gold. Gold continuing to sell off here. It is officially underperforming the S&P since March 8th. It's supposed to be an inflation hedge, and in fact, at one point it was. As inflation was going up, the gold was beating the S&P by about 1%. Now it's underperforming by about 2 times. Right, we're almost down 16% since March 8th, whereas the S&P is only down 8, although it feels like a lot more, to be honest. So, anyways, that's what you got going on there. I do want to point out the auto sales numbers are completely out there. If you like the auto space, do you? Do you like the auto space? If you like Tesla, you're going to love these numbers. Auto sales numbers come out and currently stands at 13 million. Let's go over here. 13 million cars annualized is where we stand. That's right in the middle of the COVID low and pre-COVID high. So it really wasn't a miraculous, like, oh my gosh, that's a scary number. It's a really good number. You know, it was just kind of right in the middle there. Well, you know, supply issues, transportation costs going up, the semiconductor issues that we've had there, they've all had their impact on almost all of the automakers, not to mention rates, car rates going up as well. Tesla is one of the only ones to show year over year. Oh, I like it when it looks nice. It's just not going to. There we go. Tesla was only ones to show year over year growth. This is sales in percentage terms year over year. Yep, that's correct. 56% increase in sales year over year for Tesla. A little bit surprised by Porsche, right? They saw a little growth, little modest growth there. And Ford at 1.8. Every other person saw sales decline. And by person, I mean car makers. You look down here. I'm actually shocked Isuzu is in here, but I'm guessing more work box trucks and things like that. Jaguar Land Rover ranks towards the bottom, and Honda is officially in last place, 50% decline in overall sales if you compare those year to year. Now, despite that, let's take a look at something here. So if you're looking at auto sales, here is, I couldn't plot everybody, of course. They're not public or not traded here in the States. Tesla in purple, General Motors in orange, Ford in blue, Toyota in green, and Stellantis down here in the magenta or hot pink or whatever. So despite moving in line with the other automotive brands on a price basis, right, looking at the performance of the stocks there, Tesla is the best performer, and rightfully so, right? They're selling more cars. Over the last 1 year, it actually has a gain of 2.3%. Everybody else is down double digits. Hopefully you can see on the charts there, down 13, 25, 41, and 47%. What does that tell you? You have GM, which kind of got the headlines there. They're in the lead in the sales department, let's say. They beat Toyota. 16.6% of all sales belong to General Motors. So Tesla has the biggest year-over-year increase, but General Motors has the biggest market share. However, you look at General Motors and you go, well, look at that. It's the worst performer. You almost got a 50% discount there. Does it make General Motors look attractive to you? Maybe a little bit. I just like showing the data. You guys make up your own minds there, what you want to do. Let's get this sucker out of the way and move on to new highs and lows. There was officially only 4 new highs besides General Mills. It was all healthcare related. You got Humana. There we go. Humana new highs breaking out of a over year-long range, almost a 2-year range there. That's interesting. Eli Lilly, which refused to pull back with the stock market. This one is much stronger than the stock market, as you can clearly see there. And Vertex would be the same thing. Those were all 4 of your new highs. I went through them there for you. Freeport-McMoRan was one of your new lows. It is one of the most extended on the new lows list. Remember, that is the focus. That's what I keep pointing out. Those that are sold off the most and made new lows. Caterpillar hits a new low, even more extended. Deere also hit a new low and fits in that same camp as being extended. So maybe something you want to look at. Okay, stocks in the news here today. What do we got? Apple. Apple says that the new A16 chip will likely only be available in higher-end models. That's a really good thing, by the way. They've got some new iPhones coming out here shortly, and they say that the analysts, the Goldman Sachs that downgraded or upgraded them, upgraded but lowered their target, says that it's likely that these new chips are going to stay in the higher-end phones. Right? What does that mean? Well, 55 to 60% of all the phones that they sell are at the top end. Bigger space, fancier, the X's and versions. Well, I don't have an iPhone, but of all the models that they launch, up at the higher end there. Which means what? Big fat margins, right? Big fat margins are a good thing, and if people get excited about this A16 chip, maybe they'll spend a few more bucks on a Apple. You know what I mean? I don't know. On the new iPhone when it comes out. Spirit was also in the news today. The Department of Transportation gives them 16 new, what do they call them, peak time runway slots, 16 in total there. They used to belong to Southwest in Newark, and then Southwest said, well, we're not going to fly to Newark anymore. This is just too tough here. So Spirit officially wins them. They beat out JetBlue, and they beat out Frontier. This is actually bad for JetBlue's potential takeover offer for Spirit because of the amount of traffic they have in that quadrant of the United States. That's part of what would hold them back from getting regulatory approval. Makes Frontier look just a little bit better there. So just a heads up. Altria, still down on the day. The FDA says, you know what? That ban on the Juul vapey thingies, the nicotine inside the heated exchange thing, they said, we're going to actually ban the ban. The FDA says there's some specific scientific issues that are related only to the Juul that we want to look into just a little bit there. And I bet you Altria is pretty happy with that because, they put in, $13 billion into this deal. So they're not going down without a fight. They're obviously very happy to see that, but the stock was still lower on the day. Levi's, almost new lows. Yeah, anyways, they have earnings coming out tomorrow. Somewhat new. They've gone public again. It's been 3 years. Yeah, they've officially have 12 reports under their belt there, so it's not a lot of data to go by. However, they're going to be reporting the second quarter earnings, and that is officially their worst. So the second quarter is the only quarter that averages a gap lower. It's down 2 of 3 times there. Again, not a lot of data, but it's what it is. And Amazon, you got Amazon doing a deal with Grubhub through the Just Eat, who owns Grubhub there, which Grubhub is really struggling and has been struggling there. They're like a very, very low third place in the United States. Anyways, Amazon's taking a deal there. They're going to get the equivalent of 15% ownership through warrants, some calculated differently than others. I didn't get into detail with that one, but if you want to, I'm sure it's out there somewhere. And Grubhub, or Just Eat, desperately wants to sell Grubhub, so maybe this is Amazon dipping their toe into it. I don't know exactly, but that was the news for Amazon here today. And earnings. If you were getting a little bored through the summertime season, earnings starts next week. JP Morgan, Morgan Stanley, United Healthcare, Delta, and Pepsi will be the bigger and first to report there. We will likely see profits reported in the second quarter report, but the focus is going to be on the growth of that profit. So every quarter I try to point out things that will move stocks for you. We want to know the growth of your profit, right? Are you profiting more or profiting less compared to last quarter and the year before and all that great stuff? It's expected to slow, but if we start to see people saying our profits are being severely impacted by inflation and everything going on around the world, that's not going to bode well for the market. Banks always kick things off unofficially. You got, of course, JP Morgan and Morgan Stanley will be the first, followed by all the other big ones, Bank of America, Citigroup, Goldman Sachs, and the rest. We'll see how we do. If you have any questions, I'm happy to attempt to try to take your questions and see what we do. If not, I'll be on my way. Got a dinner date tonight. Well,
Where are you going?
Cheesecake Factory.
Oh, fancy. So fancy.
You know what happened? We found a gift card. I moved my stuff, so I get my flight simulator all set up. And when I moved the dresser, gift card underneath the dresser.
Wow.
You'd have thought it was Christmas. I was so excited.
That's great. That's exciting.
Yeah, I was so excited. What do we got here? Structured employment thing is very inconvenient. Oh, I'm sorry to hear that, Richard. Yeah, that's a tough one there. My hobby is my house. That's a very accurate statement, actually. Yeah. Yep. Eloy, after selling his house, is going to be 40%. Going to be 40% cash, meaning you're going to hold back 40% of the profits from the house to cash, moving to a different province. Should you rent and invest it all, hold the cash to buy the house. So if you're going, the general rule is if you're going to move within 7 years, and I might throw a little bit extra on that thanks to rates now, then you might want to consider renting first, especially if you've never even been to this area. I don't know where you're going. But if you're familiar with it or you're going back to your hometown or something like that and you're kind of just resetting your life, you're not planning on moving within 7 years, then you got to look at buying there, of course. Especially you mentioned you've got the cash. Yep, I like it there. Who's being mean? Miriam's not mean. Don't pick on Miriam. Or unless she was mean, I don't know. I would say if it's the Miriam I'm thinking of, Miriam just knows what she likes, right? Ain't nothing wrong with that these days. Knows what you like. Stay away from what you don't. With gas oil prices dropping considerably through June, we expect inflation to decrease, or does that lag too much to make a difference? It lags too much to make a difference. Next report, though. If it stays this way, next report, yeah. I mean, it's good news either way, but it's not going to show up that quickly. You are a month behind, and I think it's 6 weeks, if I'm not mistaken. What do you think about energy as a comeback or commodities? I don't like the idea of playing an energy comeback, right? You can pick on the strongest of the stocks in the sector or stocks that are buying back shares anyways, so that's a natural lift to the stock. But I don't like the idea when you have such a monstrous rally and then a big sharp decline, you just never see it take back off again and go crazy. I don't see that. You'd be buying into an increase in production through OPEC there, so there's no reason to believe we're going to just rocket back to new highs. So the risk to reward starts to shrink a little bit, Yeah. How do you feel about Noble for recession times? Yeah. I'm going to go right there. There you go. Okay, so when you're looking at something like this, why not, I don't have the answer, but why not consider like a flat consumer staples area or a dividend consumer staples area, especially if you point out during recession times. If you really believe in the recession and you believe that it's going to be long lasting and all that great stuff, you can already see people have been moving to consumer staples. What's wrong with doing something over there? No, nothing against this, but just an extra thought to leave you with. Yeah. No, she didn't. MW, she didn't call me. Did she call me that?
I didn't understand the comment. Now that I reread it, maybe, yeah.
No. She wouldn't do that to me. I think she did.
Is that what that meant? I didn't totally understand it. I thought she was back. I thought this was exciting, but maybe it was mean. I don't know.
She was being mean. Wow. Let me know when she's back. We can fire her up a little bit. Oh no, that's all right. Yeah, you're welcome there. I'm not going to say your name. You think this recession is going to be longer? Many people at this point, and think about it, it's the news. You don't see very favorable things in the news, so you're very normal to think, this time's going to be worse. This is just horrible, everything that's going on out there. I gotcha. Yeah. Man. Well, my day is ruined. I think she was mad because when she wanted to join, we weren't taking clients. So there was no way for her to join. And then I don't know. Yeah, it's okay. Let bygones be bygones. Okay, I'm going to wrap it up there. I will be hopefully back tomorrow. But like I said, if you don't see me there, everything is cool. Just didn't make it back in time. I hope to. You enjoy the rest of your day. Thanks so much for watching, and we'll see you later.